right, welcome to another episode of Badass Banking. Today's an exciting day. I've got Peter and Tripp from Synctera, along with Gregg from Moven. Peter is the CEO and co-founder of Synctera. They're a banking as a service platform, and Tripp is the head of Fintech Sales. Is that correct?
That's correct.
And your last name is Neville, and Tripp is one of my favorite first names, and I've said this to you a couple of times. Every Tripp I've met has been a Tripp, and it's from the Boston area. They're always from the Boston area.
It's a small fraternity.
And usually their real name is like Francis or something like that.
Yeah, mine's William.
Yeah. Oh, yours is Will. Okay, yeah. William is very regal, though. Really weird. So today
my name's still Peter.
It's still Peter. Yeah. You don't go by Peter Pete. You just go by Peter.
No, Peter. Yeah.
The
firstborn son in our family is called George by first name, back to 1072. But second-born son, they don't care.
Wow.
So I'm just Peter.
And you've got a slight accent, Peter. You want to explain that just a little bit? Just a wee bit.
Theoretically, I'm from Australia, so I moved here when I was 20.
Okay.
To do my first startup. And that company, Phoenix International, is now Finastra Fusion Phoenix, the core banking system. And it's having its 30th anniversary next March, which
isn't that crazy?
Ridiculously crazy. And it's still called the modern banking system, which just makes you sad about whatever else is out there.
Yeah, not so modern. So Peter, tell us a little about Synctera, if you would.
Sure. Synctera, we started really to address this common problem that I'd seen at Uber and everywhere else where I've built a fintech before, which was it's super duper hard as a creator to figure out who you have to partner with, what the cost of everything is, and all the different integration points needed to build a neobank. So at Uber, we built a neobank called Uber Money, which was effectively like USA for drivers. And it was really a really great exercise in what would it take to build. But the challenge was, even with all these great resources that we had at Uber, it was still not a great economic deal, and it was a lot of engineering work. It was just really difficult. And we had a big team that already understood payments backwards and forwards. So the goal of Synctera is basically to say, if you don't really know anything about banking, but you want to launch a neobank because you've got an amazing community of people that you connect with and are working with, we'll help you build it. Everything from the very beginning of a wait list all the way to closing an account and everything in between, from swiping a debit card to moving money over ACH and so on. So that's what we do on one side of the marketplace. On the other side of the marketplace, we're addressing perhaps the core problem in fintech in general, which is there's not enough supply of banks. So there are 20, 30, 40, 50 community banks in the marketplace today, out of which maybe 30 do it professionally, that offer their license in a form of banking as a service in order to be able to allow a fintech to use their charter in order to launch a neobank. And that's not enough. There's effectively infinity demand. We're getting 10, 15 fintechs a day coming into the front door saying, hey, Synctera, can you find us a bank to partner with? And what happens is when there isn't enough supply, you guys have ridden on Uber, the price goes up. And so the price goes up in the form of community banks setting really high minimums because they're trying to bleed off demand. And also they're making less concessions on rev shares and so forth. So our job is to really bring out lots more banks into the marketplace that are fully trained. We provide all the platform, the infrastructure, and all of the technology that they need to operate a fintech program, and then help banks in different categories come into the market. So we've got a number of fintechs that are curious about doing things with cannabis and crypto. And so it was important to find banks that would be prepared to bank people doing business in cannabis and crypto. And so that's the job. It's the matchmaker job between incoming demand, which is I'm building a neobank for people that love pets, to I'm building something to help people manage tips workers, and you guys at Moven are helping us out with that, all the way through crazy payments companies, people doing some really interesting things, people finding new ways to monetize. And the TAM on the fintech side just keeps getting bigger. There isn't an upper bound yet. And my sort of takeaway for this is Shopify for banking is where we'll end up at, which is this idea that if you've got a community and you know what you're doing, you should be able to launch a neobank in 24 hours. And that's where we want to be.
So Tripp, as the guy that heads fintech sales, what are you seeing out there? Do you think the fintechs that you talk to, and even some of the community banks that you and I think it's Marianne talked to, are you seeing an understanding of what banking as a service is, or are they less worried about the definition of that and more about how you can empower them or power them?
Yeah, it's a great question. I think the really interesting thing about the customers that we work with and the job that we have is that we're providing a solution and a very consultative approach to helping financial technology companies either come to market or offer additional embedded financial services as a function of their value creation to their customers, whether they're individuals or other small businesses. So I think for what we're seeing is a lot of interest in what we're doing as an advocate for helping them come to market and be bigger, better, more important in their sort of worlds.
Yeah.
So
yeah,
I was kind of curious on the banking side. I know that a lot of the traditional financial institutions, especially the community banks, are kind of getting squeezed now, and they're looking for new revenue opportunities. So how would you talk to them? I think you addressed some of that as far as being able to access work with the fintechs, but where do you see Synctera slotting in with talking to BaaS systems?
So I think the way you should think about it is our target customer is a community bank under 2 billion in assets. And with under 2 billion in assets, they have almost no tech resources and shouldn't be investing in tech. They should be just running on Fiserv or FIS or my old alma mater, Phoenix. And they've outsourced pretty much everything. But they want to start a new line of business. So think of us as the next part of a bank. So imagine there's retail banking for consumers, there's small business or commercial banking for businesses in town. The sort of the engine of community banking is lending to the local small businesses on Main Street. There might be sort of a wealth part of the bank if you've got a high-end customer base. And we're advocating a new part of the bank called Fintech banking, which is its own division. It has its own set of goals and metrics. It's all margin. So it's got almost no operating costs other than folks that'll do compliance oversight and operations. And because of our architecture, the way we've built our platform, it doesn't connect to the core banking system. So you don't have to talk to Fiserv or FIS or any of that stuff. You just get up and running with us directly. And so our goal for our community bank partners is to split all the upside of any economic situation with our fintechs 50-50. So imagine the standard rev share in interchange on debit programs is 70-30, meaning the fintechs keep 70%, the bank keeps 30. So with that, we would keep half of the interchange to us as Synctera and half to the bank. And by launching them on a program, think of every place where a fintech would need to buy a service, whether it's KYC, ACH money movement, transaction processing, and so forth, ledgering. And we either build or acquire technology stacks. We've got a single API stack. So you may have heard of Meld that just launched today to help people merge API stacks across fintechs. We already did all that, so you don't have to use another third party to integrate. And what we then do is say, let's say that the fintech needs to do KYC. KYC is a market price of about $1.50. Cost ranges from 70 cents to $1. So whatever the upside is, so let's say the fintech agrees to pay $1.40, we'll split the 40 cents 20/20 with the bank, and so on. So it's pure transactional revenue, which is really great. There's no cost of customer acquisition. That's all on the fintech. There's no cost of fraud. So fraud is eaten by the fintech. The primary duties of the bank are to make sure it's safe and sound from a compliance perspective and that money laundering isn't occurring on the platform.
If I could add to that,
them a huge opportunity for a revenue resource and the ability to compete in a new market for them as well.
Yeah, absolutely. I think the other value that we create for the banks is the ability to, from a sales perspective, work with them to understand what use cases they're interested in, what fintechs might be interested in, whether it's geographic or industry verticals or specific use cases, like we're seeing the cannabis market come to fruition. So there's some really interesting opportunities for us to work in partnership with the bank and go into market and find the fintechs that we talk to that would specifically fit the niche of that bank.
And Tripp, I think that's I don't want to speak on behalf of you, but I think that's the fun part of the job.
Totally.
Right. We're like positioned, I like to position myself personally and the company Moven, just like you guys do. We're like Fintech Sherpas. We don't necessarily always have all the answers, but we understand the problem and we know that there's a solution out there. and we help find the solution. You have a set of core competencies, your partners have a set of core competencies, and that's how the bankers need to start thinking about is how do I put together a team with really strong core competencies? And a banking as a service partner like Synctera is a great place to really start that. I've been in this space since the 80s, and for decades, we've been talking about the need for digital transformation. What's held us back? What do you think has held us back?
I think on the core banking side of things, the reality is it takes a minimum of 10 years for a core banking system to become mature. And in venture terms, that's the end of a venture fund.
Yeah.
So if you're a venture capitalist, the money you put in, you're selling out of your position just as the company is starting to hit its stride. If you take examples like Finxact that got bought a couple of months ago by Fiserv, I believe, they basically had like 5 customers when they got bought, and they'd been at it for 3 years, maybe a bit longer, and that's pretty awesome. Like we got our first community bank up and running in year 2 at Phoenix, but then it took a long time for us to get to a 50 and then 100 and so forth. Yeah. But because it's so much to build this tech stack, you've got all these legacy systems that are super old, built in the 60s and 70s, that are still running big banks in the US. And you can keep layering stacks and stacks and stacks on top of it. But look at the Visa core platform. It runs on a custom piece of hardware from IBM that they still make for Visa, because literally there are 2 systems, Visa and Sabre, the old American Airlines reservation system, that run on this hardware that you can't physically make anymore. And that's what's holding it back. So you can keep layering on top of it, but at the core, if you're running on technology that's 45, 50 years old, I mean, let's be real, even Al Gore hadn't thought of the internet back then.
You know, that the layers remind me of a house of cards. You know, at some point it's going to break or collapse. And I think that's a reality that eventually some of the core is going to be faced with. And more importantly, some of the banks are going to be faced with.
I also think, Brian, in terms of like adoption of digital transformation, is that there's a human behavior and human element to it. And I think what we're starting to see is a younger demographic wants technology and they want specificity around who they do business with, especially in financial services. So the launch of all these neobanks is not net new. It's that there's a real demand for a younger demographic wanting a bank that is more akin to who they are. I think Peter makes the joke that inevitably down the road, what we're probably going to see is if there's a Facebook page for it, there will be a bank for it. And we're seeing it every day with whether it's a bank for people who love their pets, or there's a million different use cases that are very niche, very specific. And I think what we're seeing is that younger demographic adopts digital transformation a lot more. They operate out of a cell phone, not out of a brick and mortar, want to pull in and draft a check type functionality.
Well, we're working on Tip House together, Synctera and Moven. It'll be interesting to see what they're doing. You know, they're working with restaurant franchise owners, and they've got gig economy workers, people that live off of gratuities that need a new way to save, or a way to save, because the traditional banking establishment really hasn't been there for them. So that'll be interesting to see how that plays out.
I think the interesting thing is there's nothing new about this. So with the start of the community bank in the 40s, 50s, and 60s, the whole premise was geofenced. Hey, this town is my bank. And that's the definition of community, right? And now we have a digital town which exists with groups of people, and that affinity nature is happening again. But it also happened in the 80s and 90s with the uplift of all of the affinity credit cards.
Yeah.
Remember, I mean, there still are from Barclays an NFL card for every team you like. There are customizations. And the big banks, B of A in particular, and Chase, have had this business to be able to stamp out brands as at will. But the cost culture is so high that it costs them $100 million to launch a new credit card. And a neobank gets started for $3.
Yeah, are you seeing a change in the perception by FIs at this point? I mean, I understand it. I see just there's this significant dichotomy between the way a lot of, especially smaller banks that are underfunded and they're run fairly conservatively and have been since the 1800s or whatever it might be, And, then you have the whole digital aspect of it where fintechs are popping up, and it's a really exciting space. But it also seems like the bank leadership can tend to be fairly conservative when it comes to change in general. And so just your message, your metaphor for the fact that these things have existed, and, credit unions, that's what they're built for. They are the original neobank almost.
Yeah.
In a non-digital world. But are you seeing that leadership is loosening up a little bit in the FIs, and they're getting a little bit hungrier, and even though they might not understand the tech, they understand it's a place to be?
For sure. I think there's a lot of evolution that's happening in the banking space. It's still really, really early. And I don't think we end up with all 4,000 community banks being neobank supporters and sponsor banks. Maybe we end up with 100, 200, and they won't necessarily be the top 20% buying assets or anything like that. They'll be focused on innovation, founder families. So we're working with a great bank lineage where the father and son started a bank before, sold it, was successful, starting again, and that pattern matching. But this time, they're going all in on fintech, which is great. And by definition, you could imagine a neobank or an actual community bank starting in Tennessee, in Nashville, is going to be pretty focused on the local community. The fact that they're broadening their horizons is amazing. We've had a number of tech leaders and others go into the banking business by buying a charter, buying a bank. Mm-hmm. You've seen that with Wim Hockey, ex-Plaid, launching his fintech bank called Column. We have folks, ironically, another bank in Nashville called Thread, which used to be called Cibus. Same sort of thing. A bunch of great investors and founders took a bank out of restricted service because it had been subject to problems with the FDIC or whatever, and then flipped it into a really productive enterprise. So I think the innovation is coming. The easier we can make it for them, and the reduction of risk that we can provide them, the better. And as that comes to market, then we actually start making a lot of progress.
Yeah, it makes sense. And the other one you mentioned in Nashville, was that Lineage?
Yes.
Yeah. I mean, I met with Kevin years ago before I was part of Moven, and I was with Strategy Core, and I knew they had some plans. It's really exciting to see what they're doing. And I agree with you. I think that there'll be some bright bankers out there to look for ways to kind of change the model that they have and create a different kind of footprint. Listen, we're running out of time, and I don't like to make these too long. What's the best way for people to get a hold of you guys? I mean, obviously, they can go to your website, but Tripp, you're out there talking to the fintechs. If a fintech wants to learn more about what they should be doing, how do they get a hold of you?
Yeah, so I'm Tripp at Synctera.com. Our website as well has a contact us page, and that gets directly routed to our sales ops team and inevitably into a salesperson's inbox. So that's a quick way to get in touch. And we also have a ton of literature and educational stuff on the website, so it's an easy way to learn as well.
So Peter, before we go, final thoughts on the economy. Do you think we're headed toward a recession?
I don't know. My intuition is no. And my intuition is that, there'll be the structural recession forced by the Fed. So yes, from a technical perspective, but from an operator perspective, I think this is, it feels like a sort of a 1 month correction, like the start of COVID type of thing. And then people are going to get back about their business, because the fundamentals of most of the businesses are actually doing great. Look at Uber's earnings. As an alma mater, I've put it out there. The only reason they took a nosedive in the markets is because of external investments. The operating business is doing great. And a lot of folks, I think, will start to dial in more around operating dynamics. I think there's going to be some businesses like Peloton, which I love, that are going to really struggle with what happens when people actually go back to the gym. But overall, I'm pretty bullish on the economy. I think it's going to come back pretty strong over the summer. Particularly, unemployment's only 3.1% or something. So at that level of unemployment, we're almost unhealthy. So we actually need a little bit of a shake-up to change up people's
there's
roles.
a lot of cash on the sidelines, and that's always a very healthy dynamic to it. Well, listen, gentlemen, I really appreciate it. Gregg, thank you to you as well. I will make sure that I post all your contact info, both on Spotify as well as on YouTube, so people can get a hold of you. Much appreciated.
Brilliant. Thanks
Really
for having us,
appreciate it.
Brian. This was fun.